The U.S. is slowly laying the groundwork for the biggest change in the history of money. This is about a store of digital assets. You did hear that right. The United States has always kept oil, cash, and other important resources in reserve. Now, the trend is to store digital goods as well. But here's the big question that everyone wants to know. Are things like XRP going to be a part of this? Or will the U.S. make the mistake of only having Bitcoin? We're going to break this down in a way you may not have heard before today. You will know what's going on behind the scenes, how the U.S. plan is working, and why XRP might be in the best place at the right time. This is not advice about money. Countries have always kept riches for later use. It's not new. History shows that people have saved a lot of different things, from wheat to oil to silver to copper. It has always been easy to understand. Stockpile now to protect your future, and remember that when you control the stocks, you control the price. This is the reason the U.S. stores hundreds of millions of barrels of oil in key locations, keeps rare earth elements in stock, and always has vaccines and other medical countermeasures on hand. The reason is easy to understand. Reserves represent debt, both in the United States and around the world. The rules have changed, though. This strategy is still being used in the U.S. in the digital age. Picture a world where nations don't only fight over gold and oil. They fight over things that are digital. That's where we're going. Let's get back to it now. Let's go back to, this is the truth. The U.S. already has a huge amount of Bitcoin. However, it's not because they planned ahead and bought it. They got it from having seizures. Think about the Silk Road. Think about crimes. Think about all the cryptocurrency that was stolen from illegal deals. These coins are either sold at auction or kept by the federal government. All of these actions have formed what you could call America's de facto Bitcoin reserve. But there's a catch. These days, Bitcoin is mostly thought of as a digital cash. It's not making real-time transfers possible. It is not being put into rails that cross borders. When banks need to settle deals right away, they don't use this asset. It's just sitting there to keep its value, which is fine if you want something steady. But the U.S. doesn't want things to stay the same. The U.S. wants to gain power. Now people start talking about XRP because the difference between the two is so huge when you put them side by side. Think about the U.S. government as a Ben Franklin picture. All-time favorite list of pros and cons. Bitcoin is on one side, fixed supply, strong brand, and being the first to market give you an edge. That's great. But what are the bad things about it? There is no way to pay, transactions are slow, fees are high, and there is no built-in bridge function for tokenized assets. Now turn it over to the XRP side. Pros? Yes, it can be used as a store of value, but it can also be used for real-time payments, tokenization, liquidity bridge, and is already being used by financial institutions around the world. When you put them up against each other, it's easy to see the strategic case. If you want to build the next generation of global financial rails, XRP is not just a contender, it's the clear winner. There are already signs that the U.S. is becoming aware of this. In the past few years, executive orders have been carefully written to cover reserves for all digital assets, not just Bitcoin. Early papers and reports talk about more than just Bitcoin and Ethereum. They also talk about other assets that are important for payment settlement. That kind of phrase isn't used unless you're getting ready for something like XRP. Take a step back. What's the point of building reserves? It's about more than just safety. It's about power. When you store oil, you change the prices of electricity around the world. You can change the security of the money supply by holding on to gold. And when you hold on to digital assets, you put yourself in a position to change how liquid the new financial system is. People in the U.S. are deciding to sit on a shiny digital rock if they only hold Bitcoin. But if they add XRP to that, they have a tool that can control the very pipes that make global payments possible. Take a look. The technology has already been built by Ripple. There is real on-demand liquidity, not just an idea. The first tests of tokenized asset settlement are happening right now, not in a white paper. The ecosystem is getting better with Ripple's stablecoin, RLSD. Imagine the US coming in and saying, we're not just going to take your assets, we're also going to buy them, hold on to them, and stockpile them. That would make a bigger noise in the space for digital assets than anything else. Don't get the wrong idea. This is exactly what's being said behind closed doors. These trade-offs are being thought about by the most important people. They have some tough questions. When it comes to Bitcoin, the US dollar doesn't really fit in. What if Ethereum is customizable money that is based in Switzerland? Should we trust that? And when it comes to XRP, the case pretty much makes itself. A company with ties to the U.S., partnerships led by the U.S., enterprise-level technology, and a clear commitment to keeping the U.S. at the center of global banking. Trump has already said that he thinks trillions of dollars will come back to the U.S. Some of the numbers being thrown around are too high, but this is the bigger story. A lot of money is getting ready to pour into U.S. infrastructure, and digital banking is a big part of it. At the moment, the Clarity Act is being moved through the Senate. It is another piece of this problem. There are more than just rules and regulation. It's about letting a lot of big money in, sovereign income, pension plans, and 401ks. Things can't move until the lines are drawn. Also, guess what? Those lines are being made right now. This is why time is important, because the assets at stake will never look the same again once the U.S. blocks out uncertainty and the reserves begin to grow. They're not going to follow the hype. They are going to try to get utility, cash, and policy that is in line with U.S. policy. And when you look at XRP through that view, the case is clear. One trend stands out when you look at how the U.S. has used reserve strategy in the past. They don't just keep what's famous, they also keep what's important. Think about oil and gas. There was no reason for the U.S. to build the strategic petroleum store during the oil boom. It was important for the business, so they did it. The troops, transportation, and business. Oil was a weapon. In the same way, the U.S. will not accept digital assets that are not directly linked to the world's banking system. They are going to put more value on assets that give them direct access to the money flows. This is why XRP is a great asset to use as a bridge. It's not enough to hold on to it for its value alone. It has to do with holding it for function. You don't have to leave a digital store empty. It can be used, mobilized, and added to the flow of cash. Let's say that the U.S. has billions of dollars worth of XRP and uses it for cross-border transactions, either directly or through partnerships with banks and payment companies. That's a whole new type of backup asset, one that isn't just guarded but also works to help. Now, things start to get interesting. When people in the government talk about Bitcoin, they often talk about its flaws. Treasury leaders and central bankers know how hard it is to get Bitcoin, but they also know that it doesn't work well. In fact, both the Federal Reserve and the Treasury have been a part of studies that make clear points about how much energy it uses, how slow it is, and how it's not connected to payments. What's left when you take away the hype? There is no way to link to this reserve. Think about how lawmakers judge risk now. What will happen in a disaster is always the big question. For those in the U.S. who own Bitcoin, it can be sold at auction. That's all there is to it. But if the U.S. has XRP, it can quickly add cash to the world's financial system. It can make markets stable right now. That is the kind of tool that people who run the government want, an asset that can be used to both keep value and get cash quickly. Once more, zoom out. You can see the bigger picture. It's not just the U.S. that thinks this way. China has done a lot with rare earths. Take a look at how Europe handles gas. There is more to stockpiling than just safety. It has to do with showing power. In the digital age, countries that store the right digital goods will show their financial power in the same way that they show their military or energy power now. And the stakes couldn't be higher because the person or group that controls the digital system's cash will have huge power over trade, investments, and even world politics. Let us now make a link between this and regulation. It's not just any old policy that the Clarity Act is moving through Congress. It's the key to getting dollars worth of cash. U.S. institutions are stuck on the sidelines because regulations aren't clear. They are not allowed to touch XRP. They are not allowed to touch Ethereum. Without complicated custody arrangements, they can't really do much with Bitcoin. But everything changes right away when understanding comes. Governmental wealth funds, pension plans, and big insurance companies. All of a sudden, the biggest money pools in the world have money to put into digital assets. And when those distributions start, they won't go to the tokens that make the most noise. They will go after the assets that are most useful and have the best legal standing. That's why the time frame is so important. As of now, the Clarity Act is in the Senate Banking Committee. Senator Tim Scott wants to get it passed by September 30th. The bill might get to the Senate floor before the end of the year if that happens. And if a version that has been fixed makes it to the president, the U.S. will have a market structure framework for digital goods. That plan gives Wall Street the go-ahead they've been waiting for. It's not a hype. It's what starts the next stage of adoption. Take a moment to consider how this would really happen. Take a look at a U.S. national digital asset, a stash that starts with Bitcoin because it's safe, grows to include Ethereum because of tokenization, and ends with XRP because of payments and liquidity. It's small at first. It could be seized assets or pilot purchases. But once rules are set, strategic buying might start to happen. And after that, these investments have a floor backed by the government, not because people are betting on them, but because they are treated like oil, gold, and rare earths, which are important resources for the digital economy. There are already signs of this change. Blockchain payment systems are now being talked about as critical infrastructure assets in government papers. The White House has made it clear that keeping an eye on digital assets is linked to keeping the economy stable. The Defense Department has paid for research on how resilient blockchain is because they know that payment systems are just as important to national security as power lines or supply chains. Blockchain is no longer just a theory when the military is thinking about it. It's a part of their plan. This has to do with Trump's focus on bringing money into the United States from other countries. No matter if the $17 trillion number is correct or not, the story is clear. The United States wants to be the center of digital money. Not only does it need clear rules, but it also needs the funds to back it up. If the U.S. can tell the rest of the world, we don't just regulate these assets, we hold them, we use them, and we've integrated them. That gives the country instant credibility. That move says, this isn't foreign tech, this isn't speculative, this is U.S. tech at the center of the global system. Think about what would happen with the markets. Imagine that the news came out that the U.S. had added XRP to its strategic stocks. People and institutions wouldn't just buy, they'd rush. That's the best kind of recommendation. At that point, there is no longer any difference between a speculative asset and an important infrastructure asset. The best part is now here. Half of the work has already been done by Ripple. They've built the payment corridors, tried them with banks, and now they're being used in real life. There are tracks. The U.S. doesn't need to start over. It only needs to step in, buy, and merge. That's why it seems very likely. The case will be too strong to ignore once officials put all the pieces together. Also, let's not forget the foreign part. Some countries are already moving on. We've seen Asian central banks try out CBDCs that are tied to XRP. Pilot projects in Europe have used Ripple Tech to test tokenized payment. If the U.S. takes too long to act, it could lose the lead in an area that will have a big impact on banking for the next 100 years. That's why things are getting more urgent. Regulation isn't just about keeping investors safe, it's also about making the country competitive. Now, some people will ask, what about Ethereum? Yes, Ethereum will be important. Real-world goods that can be turned into tokens are a huge market, and Ethereum has the developers to support it, but Ethereum's roots in Switzerland make things more complicated from a U.S. military point of view. It doesn't mean the U.S. won't accept it, though. It only means that when things get tough, assets like XRP that are closely linked to U.S. businesses and policy will be more valuable. This is where we are now. The U.S. already has a small amount of Bitcoin saved up, mostly from seizures. The Clarity Act is about to make institutional adoption possible, and lawmakers are working behind closed doors to figure out which assets should be considered strategic. Once you break it down, it's clear that XRP fits the exact description they're looking for. It works, it's been tried, and it's liquid. It also fits with the goal of keeping the U.S. at the center of the digital economy. The next step is easy. Pay close attention to the laws, the pilot programs, and the words that organizations use. There are many signs that digital goods will soon be more than just market assets. They will be national savings. The things picked will never look the same again when that time comes. It's important to keep in mind how quickly things can change once the right switches are flipped as we continue to put together the puzzle of a U.S. digital asset store. Commodities markets were very slow for many years, shaped by supply and demand as well as political maneuvering. That doesn't work for digital goods, though. They work around the world, 24 hours a day, 7 days a week, have no borders, and can be programmed. In other words, as soon as the U.S. fully commits to a reserve strategy, it will have an immediate impact on exchanges, liquidity pools, and global settlement routes. This is the reason why things feel so important right now. The United States can't just keep digital assets in storage if it wants to keep being the world's biggest economy. It needs to pick the right ones. Take a look. Putting away an item isn't just a matter of money, it tells the whole world something. It says that this is the infrastructure we believe in, this is the value we believe in, and this is what we're ready to stand up for as a country. Let's act out a situation. Think about the U.S. The Treasury publicly announces a plan for a digital asset reserve. At first, everyone thinks the statement will be about Bitcoin. Digital gold, scarcity story, or safe and obvious choice Bitcoin would be there too. The Treasury then rocks the market by adding XRP. Not as a guess, but as a way to plan ahead. The reason why? Easy. In a way that no other product does, XRP makes money available. It works with tokenization, powers payments, and quickly connects different currencies. Just that statement would throw the digital economy into complete chaos. The market would respond right away. Buyers from institutions who have been waiting for clear signs would rush in. Stores would follow, but the trillions of dollars in idle capital would be the real story. Finally, sovereign wealth funds, pension plans, and hedge funds are all moving. When an object is called strategic, it is no longer seen as just an investment. This is important to keep in mind. It turns into infrastructure. This is the change that gold went through many years ago. Gold used to be just another commodity before it became a part of central banks' stocks. It's useful, but not essential. When central banks made it public, gold's identity changed for good. XRP can go through the same thing. It will never be just another altcoin again once it's seen as more than just a token and a part of the U.S. Reserve Plan. Let's look into why XRP fits the U.S. plan in particular. Making sure that the United States stays in charge of the global payment architecture is one of the main goals of lawmakers. SWIFT is the most popular right now, but it's slow, expensive, and easy to attack publicly. Ripple's technology is a faster, cheaper, and more flexible option. Even better, it's already built into financial companies around the world. The United States holding of XRP is more than just a bet on a coin. It's also a solidification of a future where U.S.-backed infrastructure handles all global payments. The story about energy is also important. Proof-of-work mining for Bitcoin is still debatable. Critics say that it is bad for the climate and doesn't work well. Bitcoin doesn't meet all the needs of lawmakers who care about the environment. XRP, on the other hand, uses less energy and can be expanded. This is another reason why it fits so well with government goals. When politicians argue for a digital reserve plan, it's good for them to be able to talk about how sustainable it is. Also, don't forget about cash. Liquidity is very important in the financial markets. The U.S. isn't just going to store assets to keep them safe. They want things that they can use at any time. Because XRP can quickly move money across borders, it can be used right away during financial stress, foreign exchange crises, or shortages of cash. In this way, the U.S. has a tool that is much more useful than Bitcoin or Ethereum. It gets even bigger after this, making tokens. Tens of trillions of dollars worth of stocks, bonds, real estate, and commodities are about to be turned into tokens. Tokenization needs settlement levels and bridge assets. XRP was made to play that job. When businesses tokenize assets, they don't want risk or delays. They want certainty and quick access to their money. That's where XRP really shines. And if the U.S. really wants to save money for the digital age, it makes sense to work with the very asset that makes tokenized payment possible. Now, add law to all of this. This bill, the Clarity Act, could be the most important finance law in decades. It gives the market the framework it needs by separating commodities from securities. The last thing that needs to happen is for XRP to be officially recognized as a commodity or payment-focused currency. The organizations will not wait any longer. They will know exactly where the law puts it and will act properly. This is why time is so important. There is not much time left for the U.S. to take the lead before other countries do. China is making tools for the digital yuan. Europe is moving forward with digital euro tests. And smaller countries are trying new things in a big way. The U.S. can't let itself get behind. Not only is it a good idea to have a strategic digital asset store, with the right mix of assets, you need one to stay ahead. Think about this. In 5 years, there will be a global liquidity crunch. Traditional markets will shut down, foreign exchange markets will be under a lot of pressure, and trade between countries will need cash right away. The U.S. doesn't have to deal with old methods. Instead, it uses its digital asset reserve. XRP moves quickly through corridors, keeping flows stable and making sure that trade around the world doesn't stop. That's strength. That's why XRP should be talked about. Also, don't forget about how it looks. It's not enough for world leaders to just talk about rules when they talk about creativity. They want to lead. If the U.S. openly hoards XRP, it shows that the U.S. is not only on board with blockchain, but also shaping it. That's the kind of story that brings in jobs, money, and support from around the world. This kind of action shows that the U.S. is still the leader in the digital economy. In the meantime, companies are already making it clear where they plan to bet. Payments and settlements are constantly named by financial executives as the most important real-world uses for blockchain. That's where XRP really shines. ETFs and funds are getting ready to offer exposure to more than just Bitcoin and Ethereum once rules are clear about how they will work. People are willing to pay. What is missing is clarity and support from the government. What does this mean for us now? This is the very edge of change. The United States already has Bitcoin reserves, whether that was done on purpose or not. Because of tokenization, Ethereum is likely to play a part. But XRP is in a unique position to be the link between everything. It is the settlement tool, the liquidity asset, and the bridge. If the United States really wants to build a reserve for the digital age, it would be bad strategy to ignore XRP. Now picture the moment when this is official. The Clarity Act is signed into law, the Treasury shows off a system for storing digital assets, and XRP is named along with Bitcoin and Ethereum. The effect would be historic, if that's a word. XRP would go from being a speculative token to a national reserve asset overnight, and prices would change again the next day. Adoption would also speed up. That's why these months are so important. We're no longer just talking about markets. We're talking about how the world's financial system is put together. XRP is also not waiting in the background. It's right in the middle, ready to be seen for what it is, the asset that can hold the digital future together. So keep an eye on the bills and the pilots, but most importantly, keep an eye on what's being said in Washington, D.C.